So the European currency really suffered very much from this economic crisis. Germany, well, I think that Germany felt the responsibility for this currency, although they did not want to organize bailouts of other countries. They did not want to pay for the debts of other nations, such as Greece and Italy and Spain and Portugal, the really indebted countries. Angela Merkel was depicted in local magazines, local journals and newspapers in Greece as a Nazi wearing a Nazi uniform, looking like Adolf Hitler. He was killing this country, the country of Greece and the Greek people, and that was a very dramatic situation back then in Germany, in Greece. They were burning down everything. They were burning down cars. They were burning down shops, shopping centers, shopping malls. They were burning down government government bureaus, government offices. So there was a wave of national and social violence, social unrest. They had to introduce really drastic economic measures. They were called austerity measures. Austerity means they had to cut budget spending, and they had to spend less on social benefits, less to pay the workers in the public sector, the government officials. These austerity measures were strongly correlated with the policies, and they were strictly done according to the structural adjustment policies of the IMF and also the European Union. The European Central Bank, they developed a special program for this country. They had to increase taxes. Before the crisis, they had I think one of the lowest tax rates in the EU. Germany had on average 36% of income taxes. In Greece they had 15%. And that was the reason, one of the reasons why they had so many disparities, so many too varying or too fluctuating economic and macroeconomic indicators. That was really not good. They had to change this, and this change, this transition was very, very painful for the people. However, as times went by, in a couple of years' time, people were asked if you want to really leave the European Monetary Union and reintroduce the drachma. Drachma is the national currency of Greece. Drachma. People were asked this very simple question, whether you would like to reintroduce the drachma and use it and abandon the euro. And the majority of the population said no to drachma, and they said yes, they confirmed, they yayed, so to speak, the euro. Why did they do this? Why they supported the euro? The majority of people said, or they started thinking what they had before the euro. What was the economic and political environment in this country before the introduction of the euro back in 2002? They said that we are really tired of corruption. We are really tired of high inflation, high loan rates, and we think we, the Greek people, think that Germany, which is usually considered to be behind the majority of decisions taken by the European Central Bank, we think and we would like the ECB to pursue this macroeconomic policy, and we think it would be better this way because we have a stable currency. The euro is a currency which is traded on the global foreign exchange markets. This is one of the major reserve currencies in the world. This is a world reserve currency. Many central banks in the world keep the euros as hard currency. Russia does that, China does that, and many other countries do that as well. Trillions of euros were issued, and this is the basis of this economic monetary union. And with drachma, what's this country is going to be with drachma if they reintroduce it? So again, the same sort of corruption, the same sort of banking system which is not competitive enough to be able to go global and compete with global banks, because Greece is not really a country to be able to do that. They do not have competitive advantages in manufacturing. They do not have good competitive edge in many other industries, but for the tourist industry, hospitality, fast food, restaurants, actually the service industry, because this is the country that attracts many tourists and they live. The country is really dependent on the tourism industry. All the other sectors of these economy are not very competitive, are not competitive enough to be able to go on the par value with countries such as Germany, Austria, Belgium, France. This is just out of question. This is really impossible. So they do not want to go back to the euro. They say that it is better to live through this difficult and harsh period of economic austerity, but later we will be able to control our expenditures more efficiently, and this will be a very good idea to do. So like I said, if we're speaking about this really great economic program or great economic plan or harmonization, actually I would like to say also a couple of words about real economic research behind the optimal currency theory, the optimal currency area theory of Robert Mundell. Back in 2016-17, I also decided to conduct a similar research. I also wanted to apply some of the thoughts, some of the ideas of Robert Mundell to the BRICS countries. As you know, the BRICS countries is a group of rapidly developing countries in the world, which, according to the prognosis of Goldman Sachs, are going to be the leaders of the global economy by the year 2050. They said that in 2003 they made a prognosis, and they said that by the year 2050 the combined GDP of the BRICS economies is going to overtake that of the G7 countries: the United States, Canada, Italy, France, Germany, Japan. So these countries, the G7 countries, are going to be outperformed by the BRICS economies. Later, by the year 2007, they reconsidered their prognosis and said that the BRICS is going to do that by 2035 already. This year, 2020, some economists at the World Bank and the International Monetary Fund say that China's GDP as a single power in the BRICS really reached the level of GDP of the United States. So they're almost equal, and maybe even China has a greater GDP now than the United States according to the purchasing power parity theory. So at PPP, China's GDP is today larger than that of the United States, they say, at the IMF and at the World Bank. And this is going to lead to some of dramatic changes in the world, especially in terms of currency value of the US dollar and Chinese yuan. But my thinking was, if we've got a grouping such as these, the BRICS, maybe as a perspective, as a future project for these countries, maybe they also should introduce something of the sort, some kind of a currency that could be used by these countries, maybe not as a national currency, not the currency like they have in the European Monetary Union, like the euro, but maybe this is going to be a digital currency to be used in cross-border transactions, to pay for exports and imports among the BRICS countries. And I developed two economic plans, two economic programs. Program one was a one-year program, and this program can be called a shock therapy scenario. What is a shock therapy? Shock therapy is actually when you introduce something very, very quickly and you expose your country to really dramatic changes, very sweeping dramatic changes. What's going to happen? So, for example, in the early 1990s, a group of economists led by Yegor Gaidar in Russia decided to use this shock therapy in Russia in order to help the transition of this country from the Soviet planned economy to the market economy in 500 days. So they said that we need 500 days to help this country transition from the Soviet planned economy to the market economy. And that was a shock therapy. This was called a shock therapy. The result of this shock therapy was a hyperinflation, a ruble devaluation, great unemployment, the destruction of many industries, privatization, really ineffective privatization when many enterprises was sold at 10% of their real market value. For example, Abramovich, Berezovsky, people such as these, they bought whole enterprises, Logovaz, some other resource-based companies, utilities, just at 10% of their market value. So the result of this shock therapy was a period of drastic economic conditions. The country was really devastated. The standard of living in this country fell down to levels seen last maybe after the Second World War in the Soviet Union. There were many people dying. According to some unofficial statistics, some 11 million people died due to this shock therapy scenario. So this transition was very, very dramatic. And if you do this shock therapy transition that way, that's going to be a very shocking thing, a very difficult, painful thing for the countries involved. The same actually happened in the euro area when Greece was introduced to this currency union. I think that that was also a shock therapy way to include this country, because this country was absolutely not ready to join the club of very rich countries and to be able to introduce the euro. So that was just a political decision, a political will imposed by some very high-ranking authorities in the EU. He just said that Greece should join the European Union, whatever it takes. And the country really joined. And this shocking therapy, what was the result of this shock therapy, actually? Greece, before the introduction of the euro, had a loan rate of close to 19%. And an average level in the EU countries, in countries such as Germany, Netherlands, Austria, they had 4 to 6% of loan rates. And that means, since the introduction of the euro, loan rates in Greece were also going to be so low as those in Germany or in Austria. That means these 18 or 20% of loan rates in Greece must have gone down to 4 or 6% like they have in Germany or in Austria. So what was the result of such a drastic decrease in loan rates? People in Greece just went crazy and started purchasing everything on loans. They started purchasing luxury cars. They started purchasing yachts at the price of thousands of euros, tens of thousands of euros. They bought Porsche cars, which are considered very, very, I think, one of the most expensive cars in Europe. And they purchased them on loans. They had no money, of course, but since this loan rate was very, very low, they thought that they would be able to repay these loans in time. So everything was really great. They lived, that was a period of very dramatic economic boom. The economy was booming. They successfully celebrated the Olympic Games back in 2008. They were really happy about that. There was a construction boom in the company with all those sporting facilities, hotels, tourist resorts, many other. So there was a very great construction boom in the country. These facilities could be priced really high, so there were many loans and many investments going into the country. Everything were really great until the day of the economic crisis. When the economic crisis hit, banks wanted their loans back, and the Greek people had no money to pay back. They started selling their Porsches at fire sale prices. A new Porsche could be something like 45,000 euros. They sold them at 10,000 euros. That was a very great period for speculators, for commercial people. In Russia, for example, there were a group of entrepreneurs and businessmen, commercial people from the commerce. He bought those Porsches at $10,000, almost new Porsches. They, of course, still are second-hand cars, but they were so great and so good that they bought them at this low price, and they re-exported those cars to Russia and sold those cars, of course, not at $10,000, but with a very large profit. Also, they bought yachts, like I told you previously. These yachts were the coastal line in Greece was just saturated with these yachts, ships. Yeah, yacht is a very beautiful ship, which is used to drive tourists, which is used for pleasure, which is used for organizing a leisure time for tourists and other people. They did not pay any taxes, and they did not, actually pay anything. And they just bought them on loans. And now, when the government demanded to pay back, when the banks demanded to pay back loans, and the government introduced a local tax on owning those yachts, they had no money to pay, and they abandoned all those yachts, and they were staying in the gulfs, in the coastal line of Greece, and no one really needed them. Just like a wasted material, so to speak. This country was just, the people of this country just went crazy. There was a shopping spree, so to speak. What I want to say is that such kind of a shocking therapy scenario, shock therapy way of doing things, of economic policy, is very, very painful for the country. For any country that is going to be introduced or that is going to join a club of richer countries, the club of a monetary union countries, such as the European Monetary Union. And I think if we do that, the same thing, in the BRICS countries, we're going to face the same problem. Some of the countries, like Russia or Brazil, are going to suffer really dramatically if their loan rates would have went down as far as Chinese loan rates, for example. China has very low loan rates. Back in 2015-16, we had over 20% of loan rates. Brazil had over 60% of loan rates. So you had to pay 60% annually for a loan of, for example, $1 million. That would make, by the end of the year, $1,600,000, right? So that is an impossible burden for any business, for any person to live. And in China, they had a very low loan rate of 2 to 3%. That was very good. And I think if we started this harmonization process and we finished it by the end of the year, for example, a 500-day program of this transition, I think in Russia and in Brazil, we would have the same situation just like they had in Greece by the time of the euro introduction. So the people of Brazil and Russia would go crazy and start buying everything in credit. There would be a purchasing boom, the construction boom, and boom in other industries, because capital would be coming into these countries. And by the end of some time, maybe when economic sanctions against Russia were accumulating, there could be really dramatic changes and really dramatic consequences for the economy of Russia in particular. And I think that was not really a good idea to do that.
Yeah, I have a question. And are there any successful and not very painful cases of this therapy?
Shock therapy scenario was very dramatic in the majority of countries where it was used. For example, Milton Friedman, a Nobel Prize economist, said that Chile was a very good example of economic miracle. There was also this scenario used, this shock therapy program was used in Chile. And he said that that was an economic miracle, but after some time the same thing happened. So first, this boom, dramatic boom, the boom in consumption, in construction industry, in manufacturing, investments were flowing into this country, but the time went by and nothing comes without a price, right? Nothing comes without a price. You have to pay back loans with interest, and banks demanding those loans were demanding those loans, and government debt started to increase, and this economy really collapsed after some time. Russia did the same thing. Well, each and every country that used this scenario suffered really dramatically. The other way of doing things actually is called the gradualist approach. So if you want to introduce something really credible, and if you would like that countries had some sort of economic benefits, you should really use the gradualist approach. What is a gradual approach? You do it step by step over a longer period of time. This is not a one-year program. This program is going to be done in more than 10 years. For example, I tried to model this program, and this model, the result of it was this table, or this timetable. What should you do? First, of course, you should very gradually reduce the rate of refinancing from each stage of harmonization process to another. For example, if we start this harmonization period in 2016, when Brazil had almost 14% the rate of refinancing, Russia 10%, India 7%, China 3%, and South Africa 7%. So by the end of the harmonization period, you got to have, for example, 2%. Yeah? By the year 2030, gradually you decrease these rates and go down as far as 2%. That is more possible. That is, I think that would be not very painful, because the effect of dramatic changes would be really small. Otherwise, if on the contrary you go down from 14% down to 2% in 1 year, yeah, for example, if in 2016 Brazil had 14% of the rate of refinancing, and next year 2%, I think this country would have collapsed in economic terms. And there would be a collapse in it, because nothing comes without a price. And these dramatic changes would lead to very, very devastating consequences in this economy. So there must be absolutely a gradualist approach to be done. China was transitioning from the communist economy to the market economy using this gradualist approach. They started economic reforms in 1979. By the end of 1978, they already introduced economic program that is still going on to this day. Their economic reform is still going. That means for more than 40 years, they, last year, 2019 was the year when they started economic reforms. 40 years passed and these countries still transitioning, like they say. This is a very gradualist approach of doing things. And that's why their economic growth is so impressive. So they started their reforms and they did everything by small steps. What was the problem in Russia? What was the most drastic decision in Russia to do? A full-scale liberalization. For example, no import taxes, no import duties. They went down to zero. And that led to dramatic consequences in the local markets, because the products of national produce were just outdated, and they could not compete with highly competitive products from Europe or the United States. And that was just a complete nightmare. All those companies who produced even simple agricultural products were driven out of the market due to that thing, because import taxes and import duties went down to zero, and imported products became less expensive than the local products, and people started buying them. And the same thing would have happened to the Chinese local markets if the government used the shock therapy scenario. But they didn't do this, because for some reason they understood that this is not going to work. So there were clever people. One of them was Deng Xiaoping. Deng Xiaoping was the prime minister of China back in the 1970s, in the 80s. So he led the China's government for over a decade. He started his career as a revolutionary. He was a Chinese revolutionary. He traveled a lot. He went to the United States, he went to Soviet Union, to France to study. He studied socialism, socialist economy, how it works. And by the end of 1970s, he said that this development into communism is going to end with a disaster. We got to find our own way. We got to do it our Chinese way. We're going to introduce market economy with China's specifics, with China's characteristics. He said that it is really not important which way you call a cat, a black or white cat, he said. It doesn't matter actually whether cat is black or white. The thing is that this kind of economy, whether it's white or black, should produce wealth and prosperity for the people. And they called this system the system of market economy with China specifics. It does mean that this is a market economy in the real sense of the word, because it isn't. And there are too many specific characteristics in it. But this country is transitioning, and they liberalize things very gradually, step by step, from one year to the next. They are very, very sensitive and very, very thoughtful about what's going to happen in this country. They're very cautious in doing these economic reforms and these economic things. Of course, in order to do that sort of thing, you got to have a plan, and this plan is really going to go to be accomplished not in 1 year, but that's going to be a very long-term process. And the thing is that was the major mistake we did in Russia when we started market reforms, and we're still trying to nivellate, trying to minimize the costs of those drastic economic shocking reforms of the early 1990s. We're still struggling to do that.